What's up, traders? Thank you so much for clicking on this video. I really appreciate your time. I appreciate your support. Thank you all so much. You know what I'm saying? Go join our free Telegram group. We have already 50 traders in there. That's really exciting. I remember promoting it a few weeks ago and we were almost up to 50, but we finally accomplished 50 and we're going to be getting hundreds more soon. So go join. The link is in the description below. It is free. Come chat with me, dude. It's awesome. We are live streaming now, Monday through Friday, 7 a.m. No, that's wrong. 9 a.m. Eastern Standard Time to 10:30 a.m. Eastern Standard Time. We're trading during New York sessions, so come and join us. We're live streaming here on YouTube. It's exciting. So, excuse me. I am bummed out. Let me tell you why I'm bummed out. So, as I bring up my charts right here, man, we're in this position. We took this position today, okay? And we DCA'd our 1% risk into 3 separate positions, and we risked 0.33% at each of these fib levels, the 50%, 61.8, and the 79. We got triggered into all 3. We had our stop losses right below this long-term low, okay? Price came and it tried taking us out this time. That was the time whenever it triggered us into the position. Moved away and I was feeling good. We were in solid profit from this one, really good profit from both of these two, and then we weren't really up by much from this one, but we were looking decent. And then it freaking melts again. And right here, dude, I was actually feeling like we're about to get wrecked. And then it moves up and I was like, oh my gosh, bro, what the fuck? You know what I mean? So all of this was happening and I was at work. Like, charts were moving, price was moving, and I had no idea what was going on. I just had my charts closed and I tried to distract myself at work. I had no idea what was going on. I just had my stop losses set, take profits set. I just had that. You know what I mean? I feel like this approach helped me psychologically because during trading, like if you're in a trade, I noticed like fear is the biggest emotion that we feel psychologically whenever we are in a trade and we're watching what price is doing. And whenever it's starting to head towards our stop loss, we start freaking out and panicking and we might close early. And then it starts moving to our take profit. Or like multiple reasons, fear will actually manipulate our trading during the trade. And I can't think of it like many other things that can manipulate our trade during the trade because I was thinking about it. I was sitting there trying to journal my emotions during the trade. I'm like, I don't really have any emotions, bro, because I honestly closed my charts and I like wasn't thinking about it. I was comfortable with how much I risked, so I wasn't really tripping. You know what I mean? I was like, if it loses, it loses, bro. We're all good. You know what I mean? So with this trade setup, let me tell you why I'm bummed. Price, it retraced right here and it tapped into this fair value gap, right? And it started moving away. And just not even that long ago, dude, price closed above this high right here, this swing high. It closed above it and it created this 3 candle wick swing low respecting this fair value gap, right? I was like, let me go ahead and move my stops right here below that 3 candle wick swing low because this becomes an intermediate term high, right? Or not an intermediate term high, but an intermediate term low. Why? Because it has a higher short-term low to the left and a higher short-term low to the right. This becomes an intermediate term low. If price is truly bullish and price is going up, the intermediate term low should not be violated. It should be respected. It should be held. So what did I do? I went ahead and put my stops, all 3 of them, all 3 positions. I put my stop loss right below that low. Okay. Why am I bummed? I got fucking taken out by spreads. This candle wick right here took me out of my positions, bro. Look at this shit. My total profit for the day is a little more than 0.5%. That's nice. You know what I mean? A little more than 0.5%. That's technically considered break even on the trade setups because my first initial trade was break even, but like the other two were in decent profit. So it came out to like 0.5% gain, which puts the account back at break even because we were down 0.5%. So it's not bad. You know what I mean? It's not a bad thing. But at the same time, bro, fucking spread, you know what I mean? It's gonna suck because I really do like feel like price is gonna continue higher, way higher, and take out like these external range liquidity highs way over here, up here. This is like the previous weekly high up here. So like I feel like there's still a lot of movement to come, honestly. We're barely getting started on this 15-minute time frame. Again, it is Thursday though as we are recording this. So tomorrow the markets close. We might not see too much movement the rest of this week, but next week, you know what I mean? Next week, I mean, with this week closing, we're also creating like this bullish fair value gap too on the weekly time frame. That price next week can potentially tap into or something. We did create this 3 candle wick swing high if it closes the way it does. We don't know yet. We're just kind of reacting to what price does. But bro, being stopped out by spreads in Asian session, because it is Asian session right now, bro. Like spreads during Asian session are brutal. Dude, this was like how many pips away, bro? Like, look at this. Well, I guess it wasn't too much. Like 3 pips, 3 pips away. Spread must have been like 5, 6 pips, 7 pips, maybe even more. You know what I mean? But it still came out a pretty solid trade, so that's pretty good. We're gonna continue to document this kind of trade setup. So, what trade setup am I using? Let's back test it a little bit, right? So what I like to do is my entry time frame is the 15-minute. We're actually going to go to USD JPY and we're going to back test this. On the 15-minute, I like to zoom out, right? And I like to go as far as it possibly can to the outside, right? Boom. Because if you don't pay for TradingView like me, which a lot of people don't pay for TradingView, I don't think there's too much value in paying for TradingView personally. Hate on me if you want, whatever, I don't care. Say some shit. Box me, bro. What's up? Just kidding. No, but with this specific way that I backtest, you just go to your entry time frame and go as far back as you possibly can. Drop a vertical line right there, and that is where you are going to backtest from. So then you could go to your higher time frame and you could start from there, right? So from there you could start looking for entry opportunities, breaking it down, doing all of that. We are backtesting in hindsight to prove our strategy, and then we're going and applying that strategy to live markets so that way we can also document and journal our actual emotions, because during backtesting you can't document emotions, unfortunate, but during live trading you document those kind of emotions and psychologically like how you're feeling during the trade, after the trade, before the trade, things like that. Right here you can see we'll start excuse me. So what is price doing? What I like to do primarily is I like to look at the wicks. Price is making lower low wicks and it's holding lower high wicks, right? So whenever I see that kind of idea, what I think is price is bearish, right? Because if you go to the 4 hour time frame, if we just look at those like swings right there, if you really zoom out, look at how it's like retracement, lower high, retracement, lower high, expansion, retracement, lower high, expansion, retracement, lower high. Like it actually creates legit lower highs. And if you like look at it from the daily, you could probably see it a little bit better. And like what happens is price actually retraces and it makes these like lower highs, which is the weekly candles wicks, you know, the previous weekly highs or whatever. It does this open high low close accumulation manipulation, and it manipulates into PD arrays on like the daily and the 4 hour. I like to utilize the daily first, see if there is something, and then I'll drop to the 4 hour to scale into that to kind of like clean it up and get a little smaller of an entry potentially, right? So like for example, right here, price, we're anticipating that it's bearish. And so from here, price retraces, right? I mean, if you wanted to, you could even draw a Fibonacci off of this because this is technically an expansion range, right? And during a retracement, we want to see price retrace into discount area, you know what I mean? And like actually, what is it called? Like actually provide us premium price because it's not discount. Sorry, discounts only if you're buying. Premium is whenever you're selling. It's still like a cheaper price technically. You know what I mean? Like, or it's premium price if you're selling it like top dollar, whatever. Anyways, right here you can see what does it retrace into? It retraces into this bearish order block right here, right? So whenever I see something like that, that's whenever I'll drop into the 4-hour time frame. And on the 4-hour, you'll see like where's the open of the week. So the open of the week is Sunday at 17, which is right here. So this is where the weekly opens, right? So the weekly opens, and if we're bearish, we want to anticipate a bearish weekly candle where it expands higher, manipulates up into a PDA, and then it distributes lower and it makes the expansion leg of the weekly candle, right? So it opens and it goes up, does exactly what we want it to do. It taps into premium price, taps into this daily order block. Now, within the order block, is there another PDA on the 4-hour that we can actually like scale in to it and we can look for a better entry, if that makes sense? So, right here, you'll see there is actually this 4-hour PDA, bearish fair value gap. So then we can end up deleting this one, right? And so now instead of dropping to the 1 hour for the MMXM model and our entry, we're going to drop to the 15-minute and look for our entry. And the way that we do it is we look for the market maker sell model here. If we're selling, and if we're buying, it's a market maker buy model. But right here, as soon as price taps into that 4-hour PDA, you start looking at these 3 candlewick swing lows, and you want to look for price to violate them and then hold a low risk sell, right? And I'll show you what that looks like. So we don't bite on any of this whatsoever. I mean, we kind of did today, whatever. It looked really good. It was pretty. I like honestly, I kind of broke it down in the live stream. It looked pretty, bro. I'll break it down a little bit more later, but you have these 3 candlewick swing lows that you're looking to see get displaced and then like held like a lower high, right? So what happens is you have this 3 candlewick swing low right here. Price doesn't close below it, instead makes this one right here. Price doesn't close below it, instead makes this one right here. Price doesn't close below it, makes this one right here. Price doesn't close below it, makes this one right here. Price doesn't close below it, makes this one right here, right? Boom. So whenever this one happens and this candle closes below it, this would be like a market structure shift. And then this retracement leg, you would want to see it hold and sell off. And from there, like based off of this is your range, you know what I mean? Like if there's a turtle soup that happens or something, this is your long-term high. Okay. Your long-term high is really awesome because then you can like really measure, like if price wants to do like a turtle soup just like it did right here, price, if it's truly bearish, should not violate this right here. So the same way that I actually traded today is like I like to dollar cost average and break up my risk into multiple positions based off of how many PDAs or levels that I'm going to trade off of. Here, for example, if we're comfortable with risking 1%, I'm going to break it down into 3 positions, 0.33%, and I'm going to risk 0.33 here, 0.33 here, and 0.33 here, just like we did for our trade setup that we took today, right? And where does the stop loss go for them? They're all going to go at the same price, and they're all going to go right here at the long-term high, right? So let me just grab that. Boom. Okay. And then, like, what are we targeting necessarily? Well, we do want to target like the previously weekly low. And I mean, obviously, it takes that out, but that's asking for too much. You know what I mean? You kind of want to go for low hanging fruit. And again, you kind of want to stick to a strict 1 to 2 hour type shit, right? A 1 to 2 hour will grant you so much in the end. Like, it's pretty awesome. So, for example, right here, where is it? This is 79, 60, 50 right here. So right here, a 1 to 2. So what I do is my first position that I enter, I expect that position to hit a 1 to 2. In the other positions, I am going to hold them for the same length as that position. And so that's going to grant me about a 1 to 6, about a 1 to 3, and then a 1 to 2. You know what I mean? So whenever you add it all up, 0.33 times 2 equals 0.66. 0.33 times 3 equals 0.99. You're already up about 1.65%. And then 0.33 times 6, that's 2% right there. So you're up 3.65% on this specific setup instead of just being up 2% by entering your 1% risk at just one level. We DCA'd and we got a more premium price, and that allowed for a smaller stop loss, allowing for bigger risk at that, not necessarily bigger risk, but a bigger risk to reward if we're holding it for the same duration as the other one. This is the setup. This is my model. This is my approach. I think it's fucking sexy, and I'm trading it live here on YouTube. So come and join us, y'all. I hope you got some value from this video. Make sure you drop a like, comment, subscribe, and we will, see you in the next video, you guys. Peace.